Hi, John Burley here, kind of giving you a little market update. It's end of January 2011. Some pretty exciting things. Some of it's negative news, which can be positive news, and some of it's positive news. Foreclosures. We are looking at just over 1 million foreclosures in 2010, and that number was actually shortened because the banks did their moratoriums there for a while, and then a lot of banks didn't foreclose in December even after the moratoriums were lifted. With that said, they're in full swing, going at it hard now. You know, there's an article that we were looking at, I got a couple here in front of me. There are 2.9 million foreclosure filings in 2010. They expect, and 1 million repossessed homes, so not all get repossessed, obviously. They're actually expecting 2011 to be a higher number, and there'll be well over 1 million foreclosures in the United States of America, which is just staggering when you think about it. It's about 1 out of 45 homes is 2 months behind right now in America. With that said, the vast majority of it, way over half of that, is in the 5 zones that we talk about. You know, the I-5 corridor in California, the Las Vegas area, the Phoenix area, the South Florida area, and then the area that you guys have heard me say over and over again, don't go, the Detroit area. You get some other states that pop in and out there, but it's really just huge foreclosures that are continuing there. So let's get right to it. Double dip, is there going to be one? You know, the double dip is a great marketing name that makes headlines on the news. To me, a double dip would mean, well, you fell 50%, now you're going to fall another 50%. That would be a double dip. What's happening now is in markets that went down 35, 50, 60%, they're looking at, there's been a slow decline, and they've fallen another 5, 10, some of them are going to fall a little bit more than that. I know in Arizona we've had a very, very small decline in prices. But it's not a huge double dip, catastrophic thing. So I think the double dip is a big media thing that's blown way, way out of proportion. That just isn't reality what's going on. So do I think the houses in Phoenix that fell from $200,000 to $100,000 market value, so it's 50%, that we're now buying for 50 because we know how to buy well? Do I think those are falling from 100,000 down to 50,000? We'll all be buying them for 15 or 20 grand? No, there's no way. I mean, those numbers are down, the inventories are there, things are moving through. We are at a bottom-ish thing. So I don't think we're going to have this big double dip. 2011, I think you're going to see a big return in banks continuing to repossess the homes. I think you're going to repossess them more aggressively. Look, couple problems. First problem is in the major areas, over-inventory. There is just too much inventory that's out there. The banks will not make it work. They cannot make it work. They're going to have to take the homes back. Loan modifications are virtually worthless in the major crash zones. I mean, virtually worthless, guys. Not doing it. And they're not doing loan mods with investors. Virtually not. So just very, very, very little there. So again, yeah, you get your big foreclosures to states. Nevada's the worst. 1 in 11 Nevada residents are in foreclosure. Arizona is 1 in 17. California is 1 in 25. North Carolina, they give you another view of it, it's 1 in 63. So although the bad economy has hit all areas, not equally. 2011, we look forward to lots of buying. We've got lots of good numbers coming. There'll be more foreclosures, which from our point of view, that means more inventory. Lending is still very, very difficult for investors. You really need fantastic credit to be buying on houses. I know with some of our U.S. investors, we're actually working on now setting up lines of credit, just buying off the line of credit, coming back later and refinancing. But the refinance is a whole tough thing. So we're looking at more in 2011 and 2010. The exceptions being is that the whole you don't need to pay your mortgage is gone. The whole, because you do. You know, that whole mess and that whole freak that was going on in October and November, that's long gone, folks. If you got a mortgage, you go with the money, you got to pay the money. You know, process is being through. We just got large inventories. Homes were devalued. Homes are going to be foreclosed. It'll continue. 2011 will be more than 10. With that saying, I'm seeing in most areas there's some improvement to the economy. The real estate's just staying the same. So from an investor point of view, I'm looking at this is the bonanza year to buy. If anything, it'll be better than 10. I've also got, from my investors that can get financing, we've got interest rates that have dropped down even a little bit more. So some very, very bad numbers if you look at them from a negative point of view. I look at it from a reality point of view. There's some bad things that are happening to a lot of families. With that said, we can position ourselves to come in after the banks are foreclosed and acquire even more assets at a better price. So it's John Burley. Look forward to talking to you again soon. Take care.